Hello everyone, my name is Gregor and welcome to our new episode of Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will cover Aussie, Dollar Swiss, Dollar Yen, S&P 500 and Silver. As you know, Aussie has been in a downtrend for a while and looks like that we are here in a fifth wave on a weekly chart. So maybe you think that we are in the late stages of this drop, but still there is room for another, maybe even 500 pips here. Or at least, I would say, 200 to 300 pips from current levels. Okay, so market is in downtrend and definitely I want to look in opportunities within this direction. Unless we see 5 waves up from the lows, that would be then a different story and definitely a trend changer. So what I'm looking at here on a daily chart is not anything significant or anything clear, but what really caught my eye here is this current drop down from from December 2019 highs. What we see is very strong downward reaction. So I'm thinking about impulsive structure, and if that's the case, then you know that we have to see 5 waves down before this leg can be finished, or I should say before this current bearish sentiment from the last few weeks is going to end. Okay, so looking at the 4-hour chart here, what I see is a very strong drop here. As you know, or if you have been following my past videos, I have been saying that this could be actually only an ABC decline and that we will see a reversal up for another 3-wave move before we go down. Eventually I was looking for possible very big triangle, but notice that current lag is now, or current weakness is now going to have an extended structure. Okay, and always when you have an extended structure, when third leg is much bigger compared to the first leg, well, then you may have to consider that you are actually in a wave 3 rather than wave C. In fact, I can see price currently approaching a very nice FIB target for a wave 3, 161.8% of wave 1 measured from end of wave 2. So that's why I changed my wave count, and the next reason for doing that is because I want to stay with the trend. Okay, I want to label the wave count so that I can always be prepared for more larger moves by the market. Okay, so currently market is trading down and I definitely want to be involved in this bearish direction. So what I'm referring to is actually that if this is really going to be wave 3, you still have to see 5 subwaves within this wave 3, and maybe that's not the case yet. So maybe that's a wave 1, you have a wave 2, you are now in a wave 3 or 3, so watch out for a pullback and then a new drop. And if that's the case, then you know that you should be watching resistance here at the previous swing low. As you know, if always when a support is broken, this support on a pullback, if the pullback occurs, may become very nice resistance. Then you have here also the area of a previous fourth wave of even smaller degree here. Okay, so maybe that's a very nice interesting zone for potential new drop here, and definitely I will have a very close eye on these developments while the market is trading below those 2 invalidation levels placed at 68.45 and then a little bit lower is at 68.27, around there. Okay, now let's take a look on Dollar Swiss. Now Dollar Swiss, okay, is trading very nicely to the downside. What we see is going on now is actually a decisive strong break below this corrective channel after only 3 waves of recovery back to the previous 4th wave. So this was actually a textbook example, and also current breakdown looks like a textbook as well, because it's a very strong move in a very short period of time, and normally this represents an impulse in progress. So what we are looking at is a 5 waves down. This is what I would expect here for a wave 5, which means there is room for another maybe 100 pips of decline before we see potential low here. Also, I always try to focus on minimum expectations, and that means 96.11 should be taken out if this was a correction. This correction obviously should be fully retraced. Okay, once we have this new low down there, well, that's when we should start looking and observing the activity on a daily chart, because we will step into the final stages of this wave C. Okay, so it may be very interesting if we see a strong bounce maybe still this year, then this could be very important actually reversal zone for this pair. Okay, however, for now I was short with our members, and actually we are still in short position because as I said, market is moving nicely to the downside, and looks like that this fifth wave is still incomplete. Now let's take a look on dollar yen. Now dollar yen made some very nice reversal from the upper side of this triangle range. Okay, so I'm looking for a move maybe to the lower side of this range. Okay, just trying to stay focused on easy technical approach, I should say. Okay, so what we are looking at here, we see a very nice reversal. We are now testing this trendline support, which I think it can be broken. Okay, and when this happens, you will step into maybe much lower wave A, then wave B, and then much lower wave C of E. Okay, so I would be expecting at least 3 wave drop, because I'm tracking a triangle on a higher degree scale, and each leg within a triangle should be made by 3 waves. So I think that dollar yen just is still at the start of this lower prices here. Now looking at the 4-hour chart, you can actually see that this was quite a nice strong drop, and maybe that's an impulse. There are several different interpretations valid at this stage. Okay, let me show you all of them. Okay, so the first one, okay, is that maybe wave A or wave 1 and wave B or wave 2 already finished as a flat right there, and you will see very strong decline either into wave C or wave 3. Okay, and then you have another interpretation where you see here wave 1, wave 2, you have wave 3, wave 4, and you're now in a wave 5, meaning you will see higher degree pullback and then a drop. Okay, well, here on the first count you could see a drop from current levels. Then you have another third wave count where I see 5 waves down, wave A, wave B, and now you are going to see higher prices for a wave C and then a drop. Okay, that's a third wave count. Then you have the fourth wave count where I see waves 1, 2, 3, 4, and maybe more weakness here for an ending diagonal into wave 5, and then you get a bounce in 3 waves and then a drop. So I know that there's a lot of information on those 4 charts, but what is really interesting and exciting is that I have 4 different wave counts, and all of them suggest that dollar yen will stay under pressure and that we'll see more weakness. And maybe that's something common with the 10-year US notes. As you know, 10-year US notes has made a very nice strong move to the upside. Stocks are coming down, and obviously this has a very strong bearish impact on dollar yen, okay, because of stronger Japanese yen. So I'm also short on dollar yen. We have been shorting it last week from 109.25 region. Why? Because there was this gap that I expected it to be filled before market will eventually turn to the downside. So based on all of these 4 wave counts, how I would manage this position? Well, I definitely want to consider the fact that if I want to be maybe looking for new shorts sometime in the future, I want to do that from the higher prices. Okay, but so far I'm already in some profit. So what I want to do now is I will not be risking if I'm short from 109.25 and will leave this profit running, this market actually turning up and clear my profits. What I want to do is to potentially lock some of the profits here and just let the market do what it wants to do. If we'll see a very strong drop either down into wave C or wave 3 based on this first interpretation, that's good, we are still making money. If we'll see a break higher above 108.90, which is my latest stop level, then of course what I would do is I would try to establish new shorts as the price action unfold, but from a higher prices based on other different interpretations. Okay, this wave count, this, or maybe even this wave count. Okay, so it's very important for me to look and have more options on the table always when I'm looking to enter the trade, or even if I'm already in the trade, because this allows me to manage my position more properly. Okay, okay, so what do we have left? We have the S&P 500. Well, the S&P 500 is making some very nice strong move to the downside, but always when I see such a strong decline, okay, like consider the whole price action from January 24th. If I see this on US stock market, I always have to be prepared that this is just a correction within uptrend. Because after all, market has been bullish for a very long time now, and I know that sooner or later we will see a major drop here on stocks, but just because we think this will happen, it doesn't mean that this is happening already now. Okay, so I'm sure that I have more chances to be right with my prediction if I try to label each pullback from all-time highs as a correction. Okay, because if I will just always try to call third wave to the downside or of an impulsive decline, then I will be mostly wrong, and the worst thing is that I will probably miss a lot of the upside, because you always wait for a top. It will be top from here, from here, from here, and never occurs. But when you gave up, actually the top comes, right? So that's why I want to be focused and be very disciplined here to look for potential wave counts that suggest more upside after any pullback. So with that being said, what I'm looking at here on the S&P 500 is that this very strong move up from October can actually be wave 3, and that we are now in a wave 4. If that's the case, then you should pay attention a few supports here. The first support here is at this minor wave 4 here at 31.83, and then you have this wave 4 high here from 31.55. I know that some would say that big fourth wave like this one can retrace back to the area or termination point of the previous fourth wave, which was actually here. Yes, that's possible, but notice that fifth wave was quite extended, right? So when this happens, or when wave 5 is very similar to wave 3, then you may expect that pullback will take us only to this higher point of fourth wave consolidation, to the higher price of this range, and not to the lowest price. Okay, and also then you have here this let me just adjust it a little bit, this 38.2%, which is also very significant. And then another thing is, notice that wave 4 can be equal to wave 2, which are actually corrections of the same degree, also in that very nice interesting zone, right? So I would not be surprised if the actual market would stabilize here and then we see a bounce. Okay, so definitely I have some very aggressive bearish alternate counts as well on the S&P 500, but I just think it's too soon to look for this to happen, because as I said earlier, you can actually miss a very nice maybe bullish opportunity here. Okay, and now let's take a look on the final market, which will be silver. Now silver is making some nice move to the upside here. Actually it's consolidating now, but what I see here on a daily chart is that actually market made a very strong breakout here, and it was a 5-wave rise, and then you had a 3-wave pullback. So it looks like that this is a corrective move that can take us higher. What I see on hourly chart also is that up from that swing low from last week, we can count 5 waves up. Okay, this is wave 1, 2, 3, 4, 5, and now you have first leg of a pullback. So I know that this is a very nice interesting setup for potential more upside, but you have to wait on a 3-wave drop. At least I have this kind of approach, wait on a 3-wave drop to make sure that this is really a corrective structure, because corrections are made by 3 waves, right? So I'm looking for this ABC drop, and if that's the case, then this wave C should not go beneath 17.29. So that's your invalidation level. I'm also looking at this one very closely for potential setup to go long, but what I want to see is a 3-wave structure like this, and then a recovery. And when you have this recovery, you may look to enter around the wave B zone, or maybe even earlier when you will have overlap with wave B, because that would be the first evidence that this is really a corrective decline. But the stop loss, okay, should always be below the lows. Why? Because when corrections, this first part of a correction will occur, you will never know if this is fully completed correction unless you see a decisive break above that high, because corrections can always become more complex. You can see maybe move to the upside here, and then another retest of the lows, and then move to the upside. So that's why it's important, at least if you can afford this, and adjust your risk profile correctly, then obviously stops should be is fully completed correction unless you see a decisive break above that high, because corrections can always become more complex. You can see maybe move to the upside here and then another retest of the lows and then move to the upside. So that's why it's important, at least if you can afford this, and adjust your risk profile correctly, then obviously stop should be below 17.29. okay, so bottom line, I'm waiting on a free wave drop, I'm waiting on then on a rise, and then I will reconsider maybe to enter or not. Okay, it will really depend also on some other correlated markets. Okay, traders, thank you very much for your attention. I hope this was not too long and too complex. If you have any questions, please let me know on YouTube in the commentaries below. We are also posting this video on Facebook. Make sure also to like this video and support our work so that we can share more of them in the future. Thank you and have a good day.